Hello everybody, welcome to the TraderMerlin Show. Happy Friday. Hope you had a great trading session out there today. Not quite as exciting for the crypto lovers out there, but actually it wasn't really the best day, was it? Well, you know, mixed bag. You know, for the main indices, you're looking at some downside action. We'll look at all that stuff today. Of course, I will answer just about every listener question you guys send my way, so happy to have that come through in the chat. And a big cheers to everybody. It's, today's drink of choice is Blinking Owl. It's a local distillery down here in Southern California. I always encourage you in your local hometown, type in the name of different distilleries and try to find the small stuff. Support local brewers, local distillers, etc. So that's from down here in Southern California. Anyway, happy Friday, Jorge, Dana, Ivzy, Big Eb, Hefe, well, Jeff. We've got Thomasina, Options Merchant. New one to us, Options Merchant. Good to have you with us. And Les, I hope it's a great Cape Canaveral liftoff tomorrow. One of these days I'll get down to Vandenberg or something to watch one of these launches. But for now, the only launches I'm watching are crypto. All right. So I mentioned yesterday a few things with regards to crypto market, and that's kind of where I wanted to start for the trading week wrap up. It was certainly the belle of the ball, the most significant gainer by large margin for the week. For those that may not have been watching, I will bring up some charts of Bitcoin here for you guys to all drool over. This is the type of move that if I see in the equity markets, I'm pretty quick to sell. I'm pretty quick to get out. And I actually did sell Bitcoin, but I'll tell you more about why I sold it. This is the Bitcoin futures, and of course I had a couple questions on Bitcoin futures, which I will tackle as we progress today. But all in all, you're looking at a weekly performance, and I'll bring up a weekly chart just so you guys can see the difference in the different indexes. Here is what you had for Bitcoin. If you go from the closing price of last week to where we finished this week, you're looking at a 27% gain for Bitcoin. Phenomenal. For crude oil, which we'll do the same thing on, you can tell right away, it's nowhere near the same, but all in all, a good week for crude oil, which was up about 5.6%. So, large part of this happening because of the incredibly weak dollar. I'll take a peek at that as well. Russell 2000 just continuing its unbelievable streak. I mean, this is 2 months it has not had a down week. Ripping, absolutely ripping to the upside. I'll run the numbers here if you want to know from the week over week. You're looking at another almost 4% week for the Russell 2000, which is just stellar. S&P, now it's not quite the percentage you saw for Bitcoin, but because you had that down week last week, it made the percentage a little bit better at 1.72%. NQ, some people asking about NQ. Why not? It's the same picture as the S&P, but the percentage is just slightly higher. If we go from that close, we're about 3.7% or 3.1% for the week. So that's your main stuff. I guess I could bring up the gold chart here, which looked good as well. For most of it, hey, it was a great positive week for everybody. Bulls, loving it. Bears, not so much. 2.34% for gold, but it really stemmed around this guy here, $DXY. Now, we've been checking this one out for quite some time. Many of us on the show, I know we had not really a round-robin discussion, but a lot of you targeting this area right here, which is right where we hit. You know, that 90 mark was a pretty logical point. I actually looked at 90.50 down to just below these tails here as the demand zone for it. And boy, we parked ourselves right in it. We did bounce. If we go to the daily, had a little bit of a bounce today, but all in all, still looking rather weak. We hit intraday lows on that dollar index of 89.73 was your dead low for that. So still has some room to the downside, but boy, if you're thinking of a change of trajectory right now, would be the point where I think you'll see the dollar bounce a little bit. Now, if that happens, dollar bounces, you'll probably see some pressure on these indexes and commodities. Now, right now, the trend is still our friend here on that dollar index, but this has certainly been one of the major catalysts to fueling this S&P rally, this Russell rally, this Bitcoin rally, and even the crude oil rally. Falling dollar is one of those things that really helps markets. And of course, when we have more printing and stimulus along the way, that's probably the trajectory we're going to be headed in. Now, as Congress convenes, I thought I'd put this picture up here because cheers to our politicians for not doing a damn thing. Not really agreeing on anything, not getting any stimulus, not really helping us out too much. But hey, you know what? They may as well just break for a holiday as they tend to do. So cheers to politicians for getting away with absolutely nothing on a regular basis. What that means, though, is next week we'll probably have a real quiet week with regards to trading. Why? Because the stimulus talks are going to be off the table. They're not going to convene until the first of the year, so don't expect anything crazy happening next week, except for Tesla, which I'll talk about at the end of the market. I agree, Nick. I actually was looking at buying puts on Tesla today. Woo, you want to talk about crazy premiums? Holy cow. I was looking at March, and if you would at the money March put option for Tesla, you're paying over $100. Over $100. That's just nuts. Anyway, we'll talk more about Tesla impact, which is actually probably the biggest thing to happen next week, simply because it's Tesla being added to the S&P 500, something else is getting booted, and we have a low volume week anyway. So it could be a wild, wild ride for the markets and for Tesla next week. Okay, let me go into something I mentioned yesterday, and I said I was getting a little more detail on it. I want to talk about airdrops. Like that shirt, Jorge? You know, this is something, I buy all kinds of weird crap online, and actually one of the sites I use is a Chinese company. I know, I gotta support America, but I'll tell you what, when I can get really cool, funky, bizarre shirts for pennies on the dollar compared to here, I try them out. One thing it's weird, and just you can't really get a sense of how massive my physique is, but I'm 5'8", 160, got a pretty slender frame, so I'm not a big guy by any stretch of the imagination. So I ordered these stuff from China, and I ordered a large from China, and I felt like Chris Farley in Tommy Boy, fat man in a little coat. I mean, I just ripped the shirt as I put it on. It was crazy. I actually ended up buying, again, similar shirts, but I'm an XL in China, long story short. So it makes me feel good about myself and my stature because I'm an XL in China. Okay. I don't know. Alex, you may remember me from high school. I don't know. I had weird taste. I was definitely a strange guy. Not much has changed, folks. But anyway, yeah, thanks. A little West. If I had a hat on today, I might throw a skull bandit in my lip and start talking about y'all like trading today. Let's get fixing on some cryptocurrency, shall we? All right. Anyway, here is what I did last week. And I wanted to bring this one up because in the equity markets, like Tesla, so many people are coming into Tesla right now because it's being added to the S&P 500. So this is fact. Every fund out there, every mutual fund would have to buy in Tesla to add it to their portfolio if they track the S&P 500. It's just, they have to do it. They're required to. So you know that buying pressure is going to be coming in. Another one that's usually this type of predictable pattern is when a stock does a stock split, right? Because the average investor says, wow, if I buy today and I buy 100 shares, wow, I might have 200 shares when this thing splits. Great. That's typical for a split or something like that. Even spin-offs. Years ago, I had thousands of shares of Connextent, and they spun off a company called Skyworks. And of course, because I was a shareholder of Connextent, I received, I forgot what percentage. It wasn't 1-to-1. It was like, you know, for every 5 shares of Connextent I had, I got 1 share of Skyworks. Bottom line was, it's free money, right? They're giving you something for free. In cryptos, there's 2 things to think about. There's what's called a fork. So if you look at Bitcoin, we have the Bitcoin blockchain, right? And that's the main blockchain that everyone's plugging into to do all their Bitcoin transactions. Sometimes there is an argument between the developers in the crypto space, and you have the purist of Bitcoin, which said, these are the rules we want to follow. We don't want to increase the block size or speed up transactions. We want it to stay the way that Satoshi Nakamoto designed it. Part of the group says, hey, we want to speed up transactions. We want to do this, and they do what's called a fork. So it's still Bitcoin, but now that Bitcoin has 2 tokens. It's on 2 different blockchains. And if you don't know what you're doing, you'll just leave that and forget it. You won't even know how to claim the Bitcoin. I'll give you an example. Back in 2000, I think it was 16, Bitcoin and Bitcoin Cash had an argument. And Bitcoin Cash said, we're doing a hard fork of Bitcoin. And the reason I love this story is there was a guy in my class, as I was teaching crypto at the Irvine Center for Online Trading Academy, he had a bunch of Bitcoin in his portfolio and he didn't know this. And I said, you know that they spun off Bitcoin Cash, like 2 weeks ago. He said, well, what does that mean to me? I said, do you still own those Bitcoin? Have they been sitting in your account for the past 2 weeks? He says, yeah. I said, if you owned Bitcoin as of this date, and I gave him whatever the date was, then you automatically get those Bitcoin Cash, but you have to go claim them. And he's like, well, I don't know about that. How do I do that? So what we ended up having to do is basically a variety of steps where you transfer Bitcoin from one wallet to the other, but he had to physically go claim them. Now, that's one way you can get quote-unquote free cryptocurrency is when the currency that you own does a fork. Similar to what Ethereum did. Ethereum, back when they had their hack of $55 million, they did a hard fork. And now there's Ethereum and Ethereum Classic, right? So these are 2 different things. that all stem from the one blockchain. So if you owned Ethereum, you now have both coins, but you have to claim them. The other way you get free stuff is what's called an airdrop. An airdrop is where they say, okay, if you own whatever token or cryptocurrency at a specific date, they're going to give you a certain amount of tokens of another coin. Now, what happened with Ripple last Thursday night at midnight, so it's a Friday morning at midnight, they took a snapshot of the Ripple blockchain. And whoever owned Ripple, you got 1-to-1 shares of Flare token. Right? It's just a new token that's coming out, new project. Who knows if it's going to be good or bad, but bottom line is if you owned Ripple at that date, you would receive those. Now, before I explain exactly what happened and how I capitalized on this, I want to explain something to you. If you owned Ripple and you have it at an exchange, that doesn't mean that you're automatically going to get the Flare token. The exchange has to say, okay, we will do that for you. Otherwise, you would have to literally pull your coins or tokens off into a wallet that you controlled the private keys and claim them yourself. Does that make sense, everybody? So you may own Ripple on an exchange and think you're going to get this Flare airdrop that I'm talking about. You might not. For example, I have 23,000 Ripple tokens sitting at Coinbase. And until 2 weeks ago, Coinbase wasn't going to honor this. So what I did is I was going to pull it off and move it to another exchange that was going to give it to me. And all of a sudden, Coinbase said, okay, you know what? We're going to give out those Flare tokens. So I left it on Coinbase. And not only did I leave it on Coinbase, I went here to my Coinbase Pro where I had 2 Bitcoin. And I basically, you can see the transactions down here, I think. Let me go to the transactions so you can see, so you know I'm not just making up a bunch of crap. So right here, or you can tell on December 11th, I sold 1 Bitcoin and I bought 37,520 Ripple. Now that's when Bitcoin was trading at 18,000 and change. Now what I did was interesting. I basically just flipped this and I said, convert Bitcoin into Ripple. And the reason I did this is because I knew that as of midnight on the 11th, which was, you can see I bought it the morning of. So later that night, they were going to give me 37,520 Flare tokens in this account because they said they would honor the airdrop. So what will happen is probably in a week or two, once they get the system set up, it will automatically show up on this account that I now own the Flare token. Now, the Flare token, is it going to be, $10 a coin? No, absolutely not. Could it be? Maybe down the road. Even if it's just, let's say it's a penny. Let's say the Flare token's worth 1 penny. Well, I just made $375 if that's the case. Because remember, I had 37,500 of them. Times that by 1 penny, I'm looking at $375. Who knows what it's worth? It could actually, I remember reading up on the project. It slips my mind right now exactly what the Flare token was going to be used for the project. But I remember reading going, well, it's actually not a bad project. And if it comes to fruition and all of a sudden that coin's worth 20, 30, 40, 50 cents, I've got a bunch of money in that account. All I did was convert Bitcoin to the token that was doing the airdrop before the snapshot, and then I pulled that money back out. So right now it's sitting in cash. I sold my Ripple when it broke down below 63, which I'm happy about because I think now it's at 60. Now, what I'm waiting for is Bitcoin to actually correct a little bit before I buy back into Bitcoin and collect all that. Yes. So Medic Man Down, yes, this is all going to be taxable events. And this is something that's probably the most unknown and most challenging part of all this is keeping track of all your records for every transaction. I'm not trying to hide anything from the government, but I'm certainly not going to go through and show every single transaction. What I will do is give them I have my beginning balances, my ending balances. Here you go. That's how much was made or lost during this period of time. And you guys, if you want to audit it, dig in. Here's my logins. Go for it. Yes, correct. And Brendan says Flare tokens are about enabling with XRP. Basically, what they're trying to do is they're going to be using the XRP blockchain, similar to how projects are using the Ethereum blockchain, right? They're plugging into the Ethereum blockchain. Flare is plugging into the XRP blockchain. That's it. And you're right, it's smart contracts. So they're trying to expand the offerings of Ripple, which I'm very happy about because I wasn't too optimistic with Ripple just being a cash settlement, right? Basically trying to replace the SWIFT banking system. I just don't see that happening because there's too many old guards to change that. All right. So does that airdrop thing confuse? I know the chat got really quiet in there, so I'm not sure whether I lost people. If I did, let me know what was weird there, because if you want to be involved in that crypto space, you need to know about airdrops and you need to know about forks. These are ways to get stuff for free. I don't remember how many forks have happened on Bitcoin, but if you were one of the original holders of Bitcoin, let's say back in 2010, there have been dozens and dozens of forks. Bitcoin Gold, Bitcoin Cash, Bitcoin Safe, Bitcoin this, that. It's Bitcoin Diamond. Every time you would probably have to go claim those yourself because most exchanges don't offer them because there's so many forks that happen. All right. Sheena says, just don't touch it and you don't have to pay taxes on it. While that is true, the IRS still wants to know what you're doing, you know? So they'll be tracking it, but you're probably right there. I move mine way too much, at least on the active accounts. That makes it keep rolling, average cost basis. Yeah, you mentioned that token tax before. I thought that would be, I might check that one out. All right, so that's what happened last week with regards to Ripple. And basically, you know, these are things that you can do is real quickly flip, try to buy something, flip right back in, knowing you're getting something for free. Now, there is cost to it. It cost me surprisingly a lot. If you look at the transaction cost here, you can see here it says fees accrued over the past 30 days. That's the only transaction. These are the only two transactions I made in the past 32 days. So just with all these two transactions, I paid $186 in transaction fees, which I think is a bit high personally. But, you know, hopefully, I'll let you know when the Flare token gets added to my account what it's valued at. My guess is it'll be a penny or, you know, less than a penny, something like that. All right, cool. Big Eb says, I've been using the GB. Yeah, you know, isn't it cool? It's something very simple. Let me show you what Big Eb's talking about. You guys probably know because you're on the show regularly. I created this, which is basically taking Bitcoin and subtracting the GBTC fund that a lot of people really like to trade in. And I talked about a few of these with a couple of viewers on Facebook. Beefster is one of them. He was like, oh, he's all excited about trading GBTC. And I said, dude, you are overpaying. Here's the crazy chart. Here's the daily of it. And basically all this is doing is taking GBTC, which is 1/1000th of a Bitcoin, timesing it by 1,000 and subtracting it from Bitcoin. So right now, if you were to buy GBTC thinking that you are buying Bitcoin, you are presently paying right now a $6,500 premium to buy Bitcoin. And my comment's always like, well, why don't you just buy Bitcoin? And I understand this is easier. If you're active trading, yeah, you're just trading the moves in price. But if you're someone who wants to own Bitcoin and hold Bitcoin, don't buy GBTC. You're paying right now $6,500 premium. It's almost the largest that it's ever been. Let me see here. Yeah, it's close to the largest it's ever been. Of course, back here in 2017, that was nuts, the way it was moving. It's a little bit more liquid now. But you can see as of yesterday, you know, you were close to paying an $8,000 premium for this thing. Yeah. Jeff says, I'll wait for Robinhood crypto so I can get 0 fees. Well, that's not true. Let's be clear here. You have to pay money to trade Bitcoin. It's nothing that's imposed by Robinhood. It's the network. So if you want to pay no fees and you think you're going to sell a Bitcoin and buy something else, the network charges fees. You can't make a transaction without the fees being added in there. There will be fees there. What Robinhood is saying is there's no additional fee being placed on it, which certainly will save you some money. Right now I think it's scaled on Coinbase Pro. It's like a 0.5% fee, but the more volume that you do, it starts to drop. So, yeah. Alan says, Robinhood steals from you in other ways. True. Robinhood, you're always doing market orders. And let me explain the difference there on this one. Let me go full screen again and show you guys what I think I'm using. I've got Coinbase Pro up here. We could use a bunch of different platforms, but let's go to the trade feature here. I don't think I have any account numbers showing, which is good. But anyway, I have two-factor authentication, so you guys, good luck breaking into this one. So when I sold out the Ripple, basically the profit I made was 23. So I actually made money on the Ripple move up too. So I closed it, right? Remember, I converted from Bitcoin to Ripple. I sold the Ripple at 63, which actually turned back into Bitcoin would have been 23,588. So it actually would have been up here somewhere, way above this. So right, I even made money on that trade, including the extra I got from the flare added. So the thing here is, if you look over on this left-hand side of my screen, I know it's really hard to read. I don't think I can. Oh, I can't. Ooh, look at that. So pretty. What we're looking at here, it's going to be hard for me to just show you all this, guys. Sorry. I'm trying to show you the order book, which is this part right here. This is the level 2 screen, is what we'll call level 2. You'll notice the spread right now is only 20 cents per Bitcoin, or it ranges from 20 cents to a couple of dollars at a time. Not too difficult, right, to pay attention to. Now, if you look at the spread here, if you are using Robinhood, you will always be buying at this higher price, and you will always be selling at this lower price. Always. There is no way around it. It's a market order. So if you are using that system, and you have something that's illiquid and has a wider spread, then you want to consider, paying a fee so that you can get the ability to negotiate that spread. Because there are a lot of cryptocurrencies on different exchanges that have very low liquidity. Bitcoin obviously is one of the most liquid ones that you can get, right? It's very liquid. Others aren't going to have much liquidity at all. And it varies from exchange to exchange, how liquid these things get. All right. Yes, Tom, thank you for posting that one there. Big Eb said fees are minuscule overall. They are, but if you look at this, what I did here, I only traded 50. This is the portfolio. Sorry. Okay, so here's I only traded. It was $28,000 in 20, so it's basically like $56,000 worth of transactions, and I had to pay $186 on it. That's not cheap. I mean, I can buy $500,000 worth of stock for free. So to me, it's a little high. And granted, on the grand scheme of things, it's not that big a deal. But I'm frugal. I got to watch where my pennies go. Let's see. Unless you're trading return, correct. With this stuff, most of it's going to be buy and hold. But most of mine is buy and hold. But I wanted to capitalize on that flare airdrop. All right. So we talked a little bit about spread. We talked a little about market versus limit orders. Let me go to some listener questions here because I've had a few that came through, and I want to make sure I get to those. I'm not quite sure I understood this full question from Harrison, but we talk about Bitcoin futures a little bit on this program. I don't personally trade them. I'd rather just trade the cryptos themselves. But it's much easier to be trading Bitcoin futures because you have a centralized exchange. You don't have to worry about private keys or public keys or any of that stuff. Harrison says, I tried to take a position in Bitcoin futures, but the margin requirement was $35,000, which was too large for a percent of the account for me. Does this lead to big institutions keeping relatively small Bitcoin positions when considering how much margin is needed to be parked in order to hedge it with futures? Okay, I don't think that that's part of the consideration. What it is initially on that day in November when the CBOE started their initial futures contract or futures Bitcoin contract, it was based off 1 Bitcoin and it was a much lower price point. The CME, which came out I think 2 days later, now has a totally different price point. It's 5 Bitcoins. So with 1 futures contract, you're basically locking up the price of 5 Bitcoins going forward. And given a price of, let's just say, $20,000, you're looking at $100,000 nominal value for that contract. So 35% margin is really not that bad of a price to lock in for those. So, I'm not sure why CME did it. I think they just did it to price some people out of the market so you didn't get the small fish. But, I don't think it was anything strategic on the part of the institutions to be using to hedge their position. That's my thought on it. I kind of wish that they would have done it smaller, maybe done 1 Bitcoin as opposed to 5 Bitcoins. It's kind of like, is there going to be a mini Bitcoin futures contract that's just 1 and has a 3,500 or maybe 1/5, so divided by 5? That's got a $6,000 price point. Well, that'd be nice. 6 or 7,000. I think it'd be a little bit better. But unfortunately, it is what it is right now. It's what we have to deal with. So that's it. You got to just suck it up and deal with that $35,000 mark price point. Or you can actively trade GBTC or just go buy some Bitcoin. Okay. I'm hoping that you guys can hear this when I play this audio. This is one of those ones I just went, are you kidding me? So Mario says, someone on one of your shows recommended BitcoinTrustOptions.com. Have you heard of them? And is it something to look into? Also, do you think OTA will do more on cryptos in the future? Well, you got me with a trifecta of listener questions. So let me start off with the bottom part, which is, do I think OTA will do more on cryptos? I spent the better part of 6 months fully immersed in the crypto space. I mean, I dove in with everything I had, and I'm a voracious learner when I really put my mind to things. And I was mesmerized, hypnotized, fascinated by the world of crypto when I really dove into it. And I built I thought it was a pretty good class. It wasn't designed to go into the super micro inner workings of how blockchain works, but a high level overview of how this whole new ecosystem of finance works. It wasn't being promoting trading and active trading. And OTA powers that be, they said, no, we don't want to go down that path. And I'm like, guys, I'm not teaching trading per se with crypto. And the executive team was like, it's too risky, it's too dangerous. And I'm thinking to myself, well, as long as we are clear on the risks, who are we to tell people what to buy and sell as an educational entity? And I think it's important that I can convey the risks to you and tell you, hey, and I think Brennan would agree, crypto is probably the riskiest thing that you could possibly do, not just because of market movement. Market movement is volatile, right? It's got a lot of swings. But if you lose your private key, you're screwed. And it's so easy to mess those things up. So I think they can be very dangerous if you don't know what you're doing. And I think the main premise of that class was risk management. Understand the risks that are presented to you, whether it's looking at a new project, whether it's transferring cryptocurrencies from one account to the other, or hard wallet or paper wallet, or keeping on your phone, all of these factors. And OTA said, nah, we don't want to do that. I have been bugging them to give me the class. I built the thing. It's under their name, so they have all the rights to it. But I'm hoping I can get them to give it to me. If they don't want to do anything with it, I hate to see it just sit there and waste away. Because I'd offer it to people, probably for free. And I just think there's a lot of value to it. Will they do more in the future? Absolutely. They can't do any less than what they're doing. I really think it's in their best interest, because part of being an educator, especially as Online Trading Academy, is not saying, hey, I can take you into any asset class and explain it to you. I could take the risk. I could show you juggling chainsaws that are still running, and I'd still rather teach you that than have you try to learn it on your own, because you'll probably lose an arm. And I think it's the same in crypto space. So I'm hoping they'll do a lot more. I'm ready and willing to do more for them, but I want them to be backing it and making sure that they're behind it, as opposed to being kind of iffy and nervous about it. Don't be nervous, right? I'm first and foremost a risk manager. Okay. Number 2 said BitcoinTrustOptions.com. I don't know if this came from you guys, from one of the group in here. Is anybody using BitcoinTrustOptions.com? I looked at him and I just laughed out loud. I literally laughed out loud and said, no way would I touch this. This stuff looks like crap. I would not trust it. And let me play something for you guys. I want you to listen to this real quick. So I went to BitcoinTrustOptions.com. I'm just going to play this for a few seconds. I'm hoping that the audio comes through. But here we go. Listen to what this guy says, and you tell me if you would invest in this company. Here we go.
Are you looking for a stable income from your cryptocurrency trading? BitcoinTrustOption.com is a solution for everyone. It's 100% user-friendly and 100% risk-free, because the company trades for you and send you your profits rather than you trading yourself and losing your money due to little or no knowledge about the cryptocurrency market.
I gotta stop right there. So, let me get this straight. You want to send your Bitcoin to a company that's going to actively trade it for you and make money for you, and then give you the profits. So let me see this. Let's see if I can get this straight. I'm going to sit there and say that I'm this company, BitcoinTrustOptions.com. And by the way, guys, I'm going to say this now. Don't send your money to these people. Are you kidding me? 100% risk-free? Screw you. There's no way you could make that claim. FTC should be all over these people. That is a lie. And here's the thing. If I had a system, he goes on to explain his system, guys. If I had a system that was 100% guaranteed to make me money, 100% risk-free, I'm probably never going to tell anybody on earth about it. I will be Ted Kaczynski, disappearing from society so nobody even knows who I am, and just let that machine run. Why the hell would I ask you to put money in my account so I can trade and give you the profits? I will pull out mortgages against my home and everything that I have to start up my own capital, and then I never need anybody else. This sounds like an awesome scam, a great scam. So no, Mario, run for the hills. Now, are all of these things scams? This is the challenge we have in the crypto space, is weeding through, to separate the wheat from,
all you have to do is
separate the wheat from the chaff and figure out what's going on. So let me, I'm going to log into an account here, so bear with me. I don't want to show you guys my logins and anything like that, but I'll give you an example of what I'm doing on another platform, and I have to go to two-factor authentication, guys. Always have your two-factor authentication in, so that if somebody does get your username and password, they won't be able to get in. So, or at least it makes it more challenging. So let me log in here real quick. This is one I did a little bit of research on just to see if I'd found any complaints about them, if they were bad or not. I think, Brendan, I think you're using these guys too. This is one that I use right now, and I'm trying different things just to give you an idea. And the reason I like this is BlockFi, right? BlockFi is just one of these companies out there that what you do is you send your cryptocurrencies there. They hold your cryptocurrencies. But this brings me to DeFi. Now, DeFi, which is decentralized finance, basically means that I now have the ability to do what I want with my money. So what I did is I did a test. I sent one Bitcoin over here, and it was $18,000. So I'm still basically keeping my one Bitcoin here, but what they're paying me is 6% interest per year. I think it's 6 or 8%, something like that. And what they're doing is they're loaning out and using my crypto as collateral for a lot of their loans. But look at their rates. I mean, they're charging huge rates. I guess I can use collateral, but you can pull money out, and basically they're a lender. Right? They're a lender, but they're using my capital. And by me depositing and keeping my money here, I'm getting paid 6%. I believe it's 6%. So this was transferred over, guys. It'll tell you the date here. It's only been so December 9th. So it's only been a week and a half. No big deal. The reason I think it's important is a week and a half, I made $33 for doing nothing. And why is this important? Go right now and check out your statements for your bank, your savings account. Anybody earned 33% interest this year in their savings account? Probably not. Most savings accounts, I know my Chase savings account's paying like 0.1%. I'm not going to make $33. I did the math on this. I should be making close to, I think it's $1,500 a year just by leaving that Bitcoin there. And what's interesting is, not only am I getting that 6% interest, or I think it's 6%, I think it is 6% interest, but I'm also getting whatever the Bitcoin price appreciation does. The catch is this. I noticed that to withdraw from them, there's a $50 charge to withdraw. Okay, well, I don't plan on moving this one. I will probably leave this here for, I'm hoping, years, right? I don't have any real need to move it, and I'll be getting 6% interest. And as Brendan says, he says his BlockFi is more secure than his damn bank. Well, I'm still skeptical, right? They now have my private keys. So should they choose to, they could up and disappear, and I would have to go through all kinds of processes to get that money out of there. So it makes me a little nervous when I look at somebody like BlockFi to send this over. There's also a bunch more that are doing the same thing, right? So let me show you. Here's another one. I saw this. I did BlockFi.com, and there was another one that popped up. It was like Nexo or something like that. Check this. Let me see if I can do the search again. I did BlockFi and this Nexo. Yeah, Nexo. Here's another one. I don't know anything about this one. But if you look here, let me go to Earn on crypto. And this to me, it looks like it's more international. So I'm a little bit worried. About that. Now, start earning. So let me see what their rates are. I want to see if they show me the rates. They won't show me the rates without doing some kind of login thing. I was kind of hoping you could have seen the rates that they were charging. Oh, here we go. So if you were to send over your Tether, you're getting 12% APR. Bitcoin, it shows 8%. So some of these other ones like Pax, 12%. Ripple, you could be making 8%. There's a lot of these businesses out there, and what they're generally doing is lending money out. What I would make sure of is I would not put my Bitcoin in somebody who's going to trade that money. Like the lending side of it, I understand. That makes sense. You're borrowing against my capital. That makes sense to me. But that other guy, that options trading or garbage, I don't buy that at all. I do not buy that some guy's going to give me risk-free, guaranteed money for trading it. As lending it out, that's a different one. Brendan says Binance savings products are pretty good. You know, I love Binance. It's just they're not in the U.S. I want them to be in America. Like if all of a sudden somebody steals $100,000 worth of my cryptocurrencies from an exchange, I'm walking into their building with a firearm and saying, give me my freaking money. I can't go to China. Or actually, they're in Japan. So Binance is in Japan. I can't do that. So it's a little bit of a challenge here, knowing the international side of it. You know, I've had a bunch of different international exchanges open while I could because they shut down a lot of that one. But I think CZ, the guy who owns Binance, it started off as pretty good. I'm not sure about that, Alan. I've still got an account there, so I hope so. I still got, God, I think I've got like 10 grand worth of EOS sitting in that account. Well, there was, oh God, there were so many different exchanges. I'm losing my mind. It wasn't Bitfinex. There was, oh man, they shut down in the U.S. They were in the States, but they didn't get approval. Oh, so they may have an office in Texas, but that's not where they're from. They started in China, and because of regulations in China, they moved to Japan. It's probably a satellite office, but that's cool. The other side of this is this, guys. I mentioned this in passing yesterday, and I know some of you were posting about it today. Coinbase, right? Coinbase doesn't have the best fees. I still have some issues with them. I really do like their trading platform. I think I've been showing you guys that one quite a bit. It's a pretty simple, clean, easy interface. It looks like a normal trading application. They have filed for an IPO. Poloniex, that's the one. Poloniex was the one that shut down and they forced everybody to move everything. That was kind of a weird event. But Coinbase is going to be doing an IPO probably next year. That will be very interesting. I'm going to actually talk to a few of my friends and see if I can potentially get some at their negotiated IPO price, not buy it on the open market when it happens, because that Coinbase one I think will probably be one of the most popular because it will be the only publicly traded cryptocurrency exchange. And as you've seen the expansion of Coinbase just over the past few years, you know, they only had like 3 cryptocurrencies. And then all of a sudden they get to 10. And now they're at 20. And they're getting bigger and bigger and bigger. So Binance is still a way better and bigger, broader exchange with better products. But when you bring in that kind of capital to a company like Coinbase, I think they could expand very rapidly and give Binance a run for its money and at least dominate a foothold here in the U.S. All right. What other questions you guys have for me? Take me with you. What other questions you guys have for me today? I have other stuff I want to get into real quick, but I want to make sure that the crypto stuff is kind of covered because there were a few questions that came through. I want to make sure I answered those ones for you. Obviously, I'm very excited for the whole crypto space, but that said, you know, there are some projects that will fizzle away and disappear. I saw someone earlier was asking about, was it IOTA? Someone was asking about IOTA. Let me just check real quick. So there's a couple projects that I haven't followed up. Medic Mandown says, like EOS, IOTA, or Ethereum. I own all of them. They're very different projects. If IOTA can pull off what the design is, it's called a tangle. It's a directed acyclic graph. I know I'm speaking crazy speak right now, but that's what their design is. IOTA actually has something on their hands, if they can pull it off, that will be beyond scalable. It's designed to get faster and more efficient the bigger it gets, whereas if Ethereum gets bigger, it bogs down. If Bitcoin gets bigger, it bogs down. IOTA is designed through this DAG, directed acyclic graph, to be extremely scalable and get bigger and bigger and bigger. It's an interesting model, and IOTA is really looking to be like the Internet of Things, the transactional micropayments for Internet of Things. I like it, but I don't have a big position in it. Cardano is another one that I like, part of their projects. I have a good sized position in EOS just because EOS is doing more transactions on their blockchain than anybody else by a massive margin. You guys have seen me show you the breakdown there. No one comes close to the transactional volume potential that EOS is doing. So either they have a bad business development manager at EOS, or I'm missing something, because if you can do that much transactions compared to you, basically you can take the next 15 or 20 competitors that do transactions and line them up and by who does the most to the least. You can add the next 15, 20 competitors and they still don't equal the amount of transactions that EOS can do in one day. It's nuts. All right. Yes, I did see the APR for staking at Bitcoin at Coinbase, and they also offer you. Was it DAI? They offer you some. Let me see if I can log in here real quick. I hate logging in live on air, guys, just because my passwords and stuff tend to be out in the open. Let me see if that. Oh yeah, I got another login here. Oh, the beauty of logging in. It takes so long to damn log in. Let me real quickly log in here, and I'll show you the Coinbase account. Oh, it's already got my portfolio. So let's see, what's my portfolio? So I've got only, it's dropping. I've got 30,000 at Coinbase. I thought I had more than that, but 30,000 at Coinbase. You'll notice here there's rewards that are being earned, and I thought it would be interesting if I show you over here. There's one that showed transaction, and it's continually adding things to my portfolio. So you see here this DAI. Because I'm holding cryptocurrency there, it's every day it's paying me out a small fraction. So basically, I've made 4 cents over the course of my lifetime by just holding money at Coinbase. But yes, you can stake now. Actually, I have enough Ethereum where I'm thinking about staking, because now the technology behind Ethereum used to be the same as Bitcoin in the sense of proof of work, right? That's the real energy consuming computers battling with hashing power and everything, trying to solve these puzzles so they get rewarded with Bitcoin. Ethereum used to be that model, and they've switched over from proof of work to proof of stake, which is a little bit different. And you just leave your Bitcoin or your Ethereum in there as a stake, and you can be paid out on that. So I'm debating doing that with some of my Ethereum, because I have quite a bit of Ethereum. But all right, Brandon says, I don't touch IOTA. Yeah, it's a bizarre technology. I like it. As I dove into what the DAG is, or the Tangle as they like to call it, it was interesting, but it's going to take a while for that to catch on mainstream. So I do it with risk capital for sure. Seems like Tesla and Ethereum will be big in replacing banks with the smart contracts piece. Correct. I think that's what gives Ethereum its big benefit. It's going to has the potential for everyone to plug into it and use all these smart contracts, which are still developing. Smart contracts, for those who might not understand, is simply a piece of code that you can write and attach to Ethereum's blockchain. And I know you're like, well, what's the big deal there? Because it's not truly decentralized, but Ethereum is mostly decentralized, right? Stakers make it centralized a bit, but it's the ability for businesses to start forming that compete with our traditional market environment, meaning an online insurance company that can directly compete with Geico, Allstate, online Airbnbs, online eBays and Amazons, right? But not just online, a decentralized one on a blockchain that doesn't have all of the administration pieces. There's no need to have all the admin and support stuff, because everything is code. It's all in the program. So you don't need all this overhead, and all of a sudden cost drops dramatically and removes away from these centralized entities like Geico or State Farm. So really interesting prospects for me going forward. Yes, Tron. Well, look, Tron is interesting. I mentioned this one before. I do own some Tron. Justin's son is this wacko kid. He got real lucky. Basically, he literally did a copy on someone's white paper, which is where they talk about their projects and how they're going to change the world with it, and basically did a search and replace and just put in Tron. It was somebody else's white paper verbatim. He plagiarized it. He stole this thing. But what he did smartly is, when Tron took off, again, he went and he got a bunch of developers, put a team around him real quick while his Tron was super inflated, and started buying up other technologies. To me, that gives him a little bit of a head start. I still think he's shady, but hey, you know what? I put a few grand at it. There you go. Alan says, what do you think about crypto sympathy plays like Riot and Mara? You can actively trade the peaks and lows, but isn't necessarily super reliable fundamentally. Well, look, I think that if you're active and you are on top of your trading and you know when to get in and get out, you can actively be trading these things. It's nice when I look at something like, where did I have it? Let me go back to that trading account. Here, Bitcoin's going to take me at least 10 minutes to settle transactions, right? What happened? It takes at least 10 minutes to settle transactions, sometimes 30, depending on if I get in that block of data or not. Well, here, this isn't even my account. It logged me out. All right, cool. I can buy and sell over and over and over and over and over again very quickly. It's a very nice feature, because basically they're taking the counterparty trade, aggregating trades at Coinbase, and then reporting those to the blockchain. So, you could very actively trade these things. I think it's a fantastic way to do it, but you're going to start paying a lot of money. It's going to add up very, very quickly. Well, let's see. Oh, I'm tokenized. I'm not no tokenized Bitcoin, guys. Stay away from that one. Alan says the only problem is overnight risk. Well, if you're trading cryptos, there is no overnight risk. they don't close. I mean, you're looking at a 24/7 market, 365. Remember, it's decentralized. There's no need to send the employees home for Christmas. So you don't have to worry about the gaps on it. Now, what you have to worry about is whales and somebody unloading, 50 million bucks and hammering that market. But I don't really think that there's any real big risk there with regards to gaps. I'm not a fan of Litecoin, but it was up 45% this week. Yeah, that's I think I have a bunch of that one. Is it still logged in? I have to do all the checks and balances again. I don't remember how much I have. I know I have like 200 on one of my cold storage wallets. I think I have a few here. Yeah, I have 304 Litecoin. I like it because here's what's interesting about Litecoin. Yeah, there you go. There's your Litecoin. What I find interesting about Litecoin, I know you may not like it, but if you think about what it is, all they did is take Bitcoin's code and times it by 4. And times it by 4. So what that basically means is Bitcoin now has a 10-minute block time. That's how long it takes to record a block of data. So there's 10-minute lag between each transaction being posted to the blockchain. Ethereum or Litecoin said, you know what? That's too slow. We need to speed that up. So they times it by 4. Well, in this case, divided it by 4. It's 2.5 minute settlement time for Litecoin. There will be 21 million Bitcoin and how many Litecoin? Times it by 4. It's 48 million, right? 80 times by 4. It'd be 40. Oh my God, I'm totally messed up. Times by 4. It'd be 84 million Litecoin ever produced. So they doubled the supply. They sped up the speed of it. And I believe they increased the amount of information that can be put into each block of data on their blockchain. The reason it's interesting is if you look at Bitcoin, I think we all agree Bitcoin is that store of value. Bitcoin is the one that you're going to park it. That's your digital gold. Litecoin, what's attempting to do is be more transactional. Right, it's 84 million. I know, Big Guy. My brain just farted for a second. Sorry about that. Litecoin, it's saying maybe we can use this more for day-to-day transactions. Therefore, we probably want to have a higher amount available, want to speed up the transactions. And now you have, a lot of cryptocurrencies. One that I'm pretty big on, and I love the way that they're structured, is Dash. Dash, to me, brilliant. What they're doing is brilliant. And they have privacy stuff with their coin. They also have speed, so you can do instant transactions, which don't necessarily report instantly to the blockchain, but it stays in the... It's confusing. I could probably lose a lot of people here, but very cool the way that Dash works. And here's the thing I love most about Dash. The miner rewards. So Bitcoin, when you solve a block of data for Bitcoin, you get paid that Bitcoin. Amazing. It's a huge amount of money right now. Same thing with these other cryptocurrencies. With Dash, when you solve the puzzle and you get that block of data, a percentage of that new minting coin goes to what they call their treasury. Now, their treasury is an internal fund that says, hey, because for Bitcoin, that money just goes away, right? If I'm a miner and I solve a block of Bitcoin data, I keep that money. It's not benefiting Bitcoin directly. I mean, it's issuing greater supply, but I'm not going to be benefiting Bitcoin by mining that block. How I'm benefiting with Dash, though, is if I mine a block of data, let's say it's 10 Dash is the reward. Well, one of those Dash, I forget what exactly the percentage is, goes into the treasury. The treasury is like your governing entity that says, hey, we want to build infrastructure. We want to make this program better. We want to hire developers, programmers, marketers, whatever. And all of those projects will be voted on by Dash holders. So I own Dash. I can go to their site and I can vote on a list of priority issues. If one of those issues is we want to be a sponsor for the San Francisco 49ers football team, you know what? I'm checking that box. Why? Well, I don't know. A, I love the 49ers, and B, let's get that symbol out there on jerseys. So you can vote on these initiatives. I love it. It gives a sense of democracy, a sense of pride for owning it, and also it allows those companies to build based off of their own growth. So to me, it's fantastic. The community in Dash is really strong. They had a Dash card for a little bit, but we haven't quite seen these cards go mainstream. When I say cards, I'm talking your Visa, your MasterCard, powered by Litecoin. There is a Litecoin one right now. If you do... what's their number? There's something like you have to do, it's a certain amount of spending per month and then it's free. If not, it's going to be, fairly expensive, like $100 a month or something. It was pretty expensive. Let's see. So Alan says, yeah, but where did they get in Bitcoin? I'm not sure. Maybe I missed the other part here. Where do they get in Bitcoin? Dashes our community. Okay. Oh, let me see this. Read this part by Brendan. It says you have to understand that it's the developer and user community that's more important than the technology. That's why EOS is still lagging. Yeah, that could be. I know that they have. They had Dan Larimer starting their program, and Dan Larimer is probably top 5 people in the crypto world. So they've got great people. I just don't feel like they've really invested enough to build out their projects and infrastructure. Oh, sorry. All right, what are the questions you guys have for me? I want to keep them coming. I'm going to go to this one last question here because I realize the time. And, of course, I'm having this great glass of whiskey here from Blinking Owl Distillery. I wish I could say thank you for giving me the bottle, but I bought it. I want to real quickly look at this one, and I don't have a direct answer for you on this one. Yu Yang asks, he says, I can't get my head around how to use supply and demand for call spread options. Doesn't make sense to me. Say my demand is $98 to $100 and supply is $110 to $112, and now price is in the middle at $105. Why and how should I buy a call spread options on this? Well, first off, let's map out the picture here, right? I think that the important part is to understand the picture, not exactly the strategy that you're using. So you got price moving up. You map out you found a little demand zone here. Oops. And it's currently trading 105. Okay, so it's rallied up, sold off. Sorry, I created this graphic just minutes ago, so it might be a little bit, my timings might be off. It's currently trading at 105, and there's your numbers. You got your demand zone at 98 to 100. You have your supply at 110 to 112. Great. For me, the important part here is not to say I need to be doing a bull call spread or bear put spread. There's too many other variables here to think about, Yu Yang. First off, the simple stuff is just do singular, one direction. So you could be, if it comes down to this demand zone, you could be buying calls. If you think it's going to keep dropping from 105, you could be selling puts and saying, I'll buy if it gets down in this demand zone and bounce up. As far as the bull calls, vertical spreads, diagonal spreads, it's all a question of what's the volatility at that moment in time. So are we talking about inflated option premium right now or deflated options premium? Do you think it's going to be going higher from this point or lower from this point? Or is it just going to be going sideways? Those are considerations that need to be made before you can just say, well, I'm going to do a bull call on this situation. You really have to map it out and say, what are the variables I need to think about? A, where do I think it's going to be going? B, what's the implied volatility at that moment in time, and that will help you dictate what strategy you need to be putting yourself in. And 3 is what's your goals and objectives, right? With the spread like that, with a bull call spread, you're basically limiting your downside and your upside. I don't want to get too in depth on it because I think there's just too many variables to explain specifically which strategy to use at every single moment in time. But this is what the classes are about, is explaining. Here you have a certain amount of volatility, overinflated. Great, I'll go with this strategy because I think it's going to do this. Or it's very, very deflated options, and I think it's going to go this direction. Here's my areas of supply and demand that I'm going to use as backstops. I mean, these levels that are drawn on the screen here, those are your backstops. These are the concrete walls that you have determined will be the guide rails for this trade. So you can, make your trades within this range, or, be selling specific option contracts out of this, again, based off what the volatility will be for that moment in time. So there's a lot more to it than that. I wanted to draw the visual so you can see it's not about saying, well, the bull call spread here, I don't understand it. I need to know more information. What's the volatility look like? Are we way overinflated, deflated, etc.? All right. I may actually get out of here under an hour. Let me show you other things that happened. Let's see. Oh, I got too many things going on here. Here is what happened for today's trading. This isn't even today. I didn't even change the damn dates. Dab nabbit. Did I not change this? Oh, you know what? I didn't even change these. Son of a biscuit. This is what happens when I get going too fast. I will just open up the graphics here and show you these. With regards to the earnings announcements, here's what happened earnings-wise for today. You had great earnings from Nike. They had blowout earnings and were up 4%. The one that was interesting for me is Winnebago. Down near the bottom, you guys can see WGO. They were expected to make $1.03 per share. They came out at $1.69. That's a big beat, and they were up 5%. And it just speaks volumes to what's going on with the world right now, and people saying, you know what, now's a good time. I'm quarantined. I can trade from home or work from home and talk about go on conference calls from a Winnebago. So let's travel. Notice Carnival Cruise Line's a bunch of dashes. They have been supposed to report every week, and they just keep delaying it because I'm sure they're trying to position themselves for a horrible, horrible earnings season for Carnival Cruise. If it's not for PPP money, this is definitely a sinking ship. Now, for Monday, here is what you have cooking for Monday. I know it's hard to read, so let me just bump this up in size here. You have final GDP numbers coming out for the UK tomorrow, 15.5, or tomorrow, on Monday, 15.5%, so the expectations. Retail sales numbers also coming out for Australia on Monday. That is expected to jump up from 1.4% to 2.5%. Other than that, not a lot of really critical stuff here, but if you're trading the euro, the pound, those might be factors in your trading day. Okay, cool. Anybody else got any last minute questions for me before I decide to cut the show loose and go finish up and go throw my my prime rib in the oven and get a nice little prime rib dinner going on for tonight? Any questions? All right. Well, I don't have a full list of. Hey, Walker, Texas Trader, joined us today, buddy. Good to see you. We have. Let's see. I know we've got a couple of good guests next week. Just for some reason, my brain is just deciding not to function today. It's not the whiskey. You guys always say, "Oh, it's the whiskey. Must be the problem." No, it's not. I believe we've got Mark Thornton going to be on the program. For those of you that know Mises and the Austrian School of Economics, Mark Thornton is definitely a major player there, and we will let me verify. I think it's. So we've got 2 books so far. I've got Jeff Manson on Tuesday and Mark Thornton on Monday. So that's my day for Monday and Tuesday. We'll see what happens Wednesday. we're gonna have some time off here, guys, because Wednesday and Thursday, Friday of next week, obviously, holiday stuff. I may actually do a show on Thursday just because I'm gonna be gone the entire next week. I'll be off to going out to Zion and going to explore some canyons and get away from civilization for a while for New Year's Eve. So we'll see probably no shows that week. I know. You faithful, you dedicated people are going to be, what are you going to do without me? Okay, let's see. Again, last minute one. Speaking of Texas, I want to move back to Austin. Hey, you know what? Are you sure about that? So I'll give you a reason why it might be dangerous to move back to Austin. I've been involved in real estate in Austin for many years thanks to my dad. And in 2005 or 6, I bought a place in, was it 5 or 6? Oh, I can't even remember. No, it was later than that. 2010. 2010, I bought a place in Austin, Texas. Right down south of 6th Street. Old Torf was the street. And it was kind of funny because I bought this place. I paid like $200,000 for it. It was in nice condition. I put almost no money into this thing over the course of the next few years. I sold it for $360. So bought it at $200, sold it at $360. And the reason I bought it is my real estate agent was like, this is a really up-and-coming area of Austin. It's SoCo. It's that whole area. And he goes, they're gentrifying everything. This will probably do well in the next few years. So I sold it at $360. Now, it's a 2-bedroom, 1-bath house. It's got a really nice lot, but, it's nothing fancy house-wise. So I sold it for $360, and that was, I believe, 2016 or 15, one of those. And I should have kept it, Alan. Oh, you're telling me it's worth $800 now. So the point I'm trying to make is Austin was kind of booming. The prices are through the roof right now. I mean, they are really, really, especially for that area, South Congress, Old Torf area. Yeah, I know. I locked in my profit, right? Bought at $200, sold at $360. I think I did okay. But yeah, it's really expensive. Austin is absolutely amazing. Oh, you know what? No, I can't end. Big Eb, you're in luck today. It's going to be an hour show. Here's why it's important. Haha. Monday, you have a company being added to the S&P 500. You may have heard of this small little company run by a very quiet guy who doesn't really say a lot, Tesla. So let me bring up Tesla's chart here for you guys because this is critical. This is buy the rumor, sell the news, right? TSLA. Here's Tesla's chart. This just screaming. Look at the volume today. This is everybody last minute trying to get in on it. I'm betting you tomorrow or Monday, I think it's going to be a bad day for Tesla. I think you're going to see a pretty ugly sell-off on Monday. Why? Because everybody that needed to buy it is already going to have to be in because the adjustments need to be made to the holdings of anything that's tracking the S&P 500 on Monday. Those changes need to be in. Number 2, everybody who's riding the coattails of, they're added to the S&P 500 knows they're added on the 21st, so they're already bought in. They're not going to buy anymore. They can't buy any more right now. So what will happen is, who's left to drive it up on Monday? Crickets. There ain't going to be nobody left to drive that thing up on Monday. That's why the puts were through the roof. It was crazy how expensive the puts were for Tesla. So my guess is you're going to see an ugly week for Tesla. The other side of the coin is this. Excuse me. You have AIV. This is the company that's getting removed from the S&P 500. And before you look at this and start thinking that these guys might be singing the Southwest Airlines theme, which is "Want to Get Away," this is obviously a murdering, right? AIV, for those that might be listening to the podcast right now, it gapped down from $40 to like $5 on Tuesday, I believe. That's crazy. Now, hold on a second. You look at this and you think, man, this thing's down 89% right now. Yes, it is, but everybody that owned AIV, because you look at this and you think it's removed from the S&P 500, it's really bad news. It's not. It's still trading at 450, and everybody who owns shares of AIV also got a spin-off of AIR. So now they own AIR as well, which is $35. You add 35 plus the 5 for AIV, that's $40. All right? So AIV, it hasn't really dropped much. All right, so the reason why you're not going to see a big sell-off and don't think about shorting AIV is because AIV is a small percentage of the S&P 500. Just for giggles, to make me entertain and just show you guys how crazy the S&P 500 index is. Type in chat what percentage weighting of the S&P 500 AIV represented. Remember, they are removing AIV from the S&P 500 to make way for Tesla. What percentage currently, as of today, is AIV? And no cheating. Don't go to Google and look at it. I'm going to give you the answer anyway. What percentage of the S&P 500's weighting is AIV? Type it in the chat. I'm curious what you guys think. Alan says 0.002. Wow. You're on point there. Anybody else? We got one person. I already lost everybody since I tried to wrap up the show earlier. I'll tell you this. Apple is 6%. Apple is number one at 6%. I believe Microsoft is... I can't make that claim. I think Microsoft was second. But I know Apple is number one. You guys are good. I mean, it's 0.0... 2 1,000ths. Let's see, that's tenths, hundreds, thousands. Yeah, it's 2 1,000ths of a percent. It's insignificant, guys. I mean, if AIZ dropped 89%, like you can see on the chart here, the S&P is not even going to move. It's irrelevant on the index, honestly. It's nice to have in there because it represents, real estate and apartments and things like that, but it's totally insignificant, really insignificant with regards to weighting of the S&P 500. So no big deal. You were pretty damn close. I mean, you guys did really well. Actually, I was pretty shocked when I saw the weightings. And we look at the way markets can be somewhat biased. Let me just real quickly show you something here. I know you guys probably got to go to your other shows. I'll show you the S&P 500 weightings here just so you can get an idea. I usually use this one in my Slick Charts. So here we go. Slick Charts does a really good job. But there's Apple. Yeah, Microsoft is number 2. So if you look at the top 5, right? And I'm going to include Google Class B shares, so it's really top 6. You're looking at 6, 11, 15, 17, 18, 19. You're talking about 20% of the entire S&P 500 is represented by really 6 companies. But down here near the bottom, and when we get to like the 500 areas, these all of a sudden it starts to get weaker and weaker and weaker and weaker. There you go. Apartment investment and management, 0.002. It's nothing. And look at the next closest one is 0.007. So it's no wonder they decided to remove AIV. It's irrelevant and insignificant on this one. Yeah, you know what? Medic says 4.2%. I don't think so. I read that they wanted to do 1% for Tesla. And let's be honest, guys. Would it be dangerous for Tesla to be weighted at 4.2% of the S&P 500? Do you think that would be dangerous for the markets? Oh, hell yes. You're looking at something that's so volatile, could very easily come crashing back down. I mean, I don't know. I think that'd be very, very bad move to have it that heavy. No. Tesla's supposed to be 1%, is what I read. Who knows what it'll ultimately be. We'll find out next week. Oh, Brendan. I envy you. Most days, unfortunately, are long gone for me. Cool. So we will see what ends up happening. I'm showing you the top percentages here. If Tesla's at 1%, it's still in good company. I mean, Walt Disney, Nvidia, United Health Group, Procter & Gamble, Visa, JP Morgan, those are all 1%ers. All right, those are your 1%ers. These are major companies out there. So we will have to wait and see how this all pans out on Monday, but it will be very exciting, and I think that will certainly create some waves. And it will be more volatile than normal. Why? Because remember, it's a holiday week. You got a half day Thursday, I believe. You got a close day Friday. It's going to be a very, very quiet week. Now you have a very quiet week, thinly traded, with a big event like Tesla being added to the S&P 500 on Monday. Boy, Monday could be one of those days where you're just like, oh, damn! So be careful out there on Monday, guys. It could be a wild ride. All right. Cool, everybody. That's going to do it for me. I think we can make you all happy. It's an hour and 5-minute show. I have to pay for extra data storage today because the show went so long. Anyway, hope you guys have a fantastic weekend. Cheers to all of you. Thank you for all your support. Do me a favor, click that thumbs up button, which I know most of you guys are here, regulars always do. Of course, Tom and others have started a thing over on LinkedIn, which is Friends of TraderMerlin, which I'll try to be more active on that. You can check that out as well. I posted the link yesterday. If you want, down below the video or the description on the video on YouTube, there's a whole bunch of links to Facebook. A lot of stuff I don't use because I'm too damn busy with other stuff, but I will do my best to do Instagram and LinkedIn and Facebook and all these things. So anyway, have a fantastic weekend, everybody. I will see you all on Monday for the Tesla Meltdown. Take care.